Today, we're going to be talking about something that I don't think gets enough attention at the normal level, and that's net worth. You'll hear a lot about net worth when we talk about the ultra rich, but actually what I want us to become comfortable with by the end of this presentation is that it isn't about how much you make, it's how much you keep. This calculator should help you get a sense of where you are at today, and from there, you'll be able to extrapolate your own unique to-dos based on where you want to go. So the question I ask for everyone is, what's your net worth bullseye, right? Where are you trying to go? Point being, net worth does really matter, and I'll convince you of it here. The first thing I want to talk about is the psychology of net worth. I want to give you kind of our 4 points around how we think about net worth. We won't cover all of these. We will touch on these shortly, but of course it starts with mindset, and that's understanding what net worth is, what it isn't, and getting comfortable that a lot of these things carry emotional weight for us. We're talking about building a net worth here. This isn't something that happens with the flick of a switch, and that's when we talk about income potential stacking. It's not just about what we have right now, about asking the question, how do we create the right streams of income and how do those stack? And as we go on, and what you'll learn as you continue your career of wealth accumulation and asset accumulation, it's about upgrading your potential along the way. So once you know how to run a business with one asset, how do you run a business with 10, right? And the idea is that you're able to upgrade your income potential along the way. And if you think about doing that, not just in one industry, or not just with one business, but with multiple, then you can have not just algebraic growth, you can have geometric growth. As we go along, we want to talk about the strategies and tools that we're building there. We want to make sure that we're looking at the right numbers, that we're looking at things over time. And lastly, we want to make sure that we are strategizing and improving always. So once you have the income potential, then you implement the right tools. Sometimes that's bookkeeping, accounting, that's having the right Excel sheet. And then what do those numbers mean? Now that you have more potential, now that you have the right tools, how do you reflect on all of this to tweak and improve along the way? That's the name of the game, and it's what I see with all our clients, from multi-millionaires to that new guy on the block, the retiring real estate investor that's looking at asset protection. These are commonalities that I implore everyone to get good at. So first, I want to talk about the issues with mindset, because that's going to be the priority to tackle. And I want to acknowledge it's embarrassing and emotionally difficult to talk about finances, and because no one's talking about it, it's so easy to ignore. And that mindset is 100% wrong. And for those that haven't read it, I highly recommend reading Napoleon Hill. And if you have, read it again, because one of the things that Napoleon Hill talks about is money consciousness, being very clear on how much money is exciting for you and really building that into your psyche. Look, I want you to get your hands dirty with money. If that means buying a small stock, or giving someone $100 with a 10% loan, or making bracelets and selling them on Etsy, these are all things that are gonna get your money consciousness going. One influencer that I think is pretty interesting is Gary Vaynerchuk. He has a thing about buying things at garage sales, selling them on eBay. Those skills really build the kind of muscle that get you thinking about ROI. There's a lot of velocity behind getting that first dollar. You just have to capture it. Think about that. Now, I also want you to start focusing beyond the short term. I'm not even talking about just ourselves as individuals. I mean, look at how Congress balances budgets, right? They throw in quick cuts to programs or raise taxes to cover expenses last minute. When they don't succeed at the game, they end up shutting down. That's something that I think is, on a macro scale, more problematic. And if you look at countries like China, they have a 20-year plan. We can't even figure out a 9-month plan. So I definitely, if I can make a small splash in the universe and get us all thinking a little more long-term, it's something that's going to have dividend over time. And ultimately, the long-term game is the one that's going to pay out the right way. And Bill Gates says that most people overestimate what they can do in a year, but they underestimate what they can do in 10. And I think that's super important. And I think the actual punchline there is that most people don't have a 10-year plan. So really think about what long-term planning is for you. And lastly, people don't have the tools and strategies to tackle personal finances. And that's the sad truth. I have a business because I'm educating people on taxes. That's our main bread and butter. You don't learn how to do taxes in school. The most important concept in taxes isn't even touched until people actually have a business. So really really important that we start looking at what tools and strategies we need. And that's what this video is about here. So one of those tools that I focus on is the target calculator, the personal finance calculator. And if you move left to right, it understands kind of where we are now, what our current balances are, both assets and debt and liabilities. And then if you look to the far right, it's where we want to go. So this is a real live example that you're looking at on the screen. I know it's very small, but if you just want to focus on two numbers, what you can see is that this individual has a net worth of, there's actually a couple, a net worth of $472,000, and their goal, their end of year goal, this is ambitious, but their end of year goal for next year is to increase that net worth to $688,000, right? So that's accumulating $200,000 over 1 year, which is pretty ambitious. But to do that, they had to get clear on where they are and where they could make improvements. So everything in between that current balance column and the end of year goal is going to be how progress is measured over that period. I want to get into some more details here to kind of explain what we're looking at. But the point is, and this is a zoomed in view on what's going on, you want to be able to break down balances within each of your accounts. So you can see that first we're starting off with income accounts, right? So we've got a checking account for our regular income. That's, I call it W-2 work. That's our regular salaried work. We have a checking account for consulting work that's performed on the Upwork. So we figured out a way to increase our income potential by providing those services on a freelance platform. And then we have a personal savings that we've been building over the years because we've been disciplined about taking profits off the table and paying our taxes. And we've built up a balance of $29,000. Most people do not have these kinds of savings. I just want to say, having done this for many, many individuals. So this is someone who's in a very strong liquid position, meaning that they can cover something like 6 months of their expenses if they needed to, but it also allows them to make payments on asset accumulation, which includes putting money down on a property or funding growth in their business. But what I really want to drive everyone's attention to here is that you have your liquid account. These are things that can be converted relatively quickly, meaning if you needed to have cash out 7 days from now, you'd be able to convert these assets into cash. So these constitute your short-term accounts. And similarly, short-term liability accounts, I guess traditional accounting, it's something within a year. We think about it within the month. Now, we've got a credit card here. We've got an Amex Everyday card. These are things that we expect to pay down in the next 30 days. And again, if you actually look at the net of these total assets, 46,000, 47,000 if you round up, say, oh my gosh, that's tons and tons of money. Well, hold on. They've got huge credit card balances, about 20,000. So when you net those out, you have a net short-term total, that's what ST stands for, of 28,500 about. Now, this concerns what are, semi-liquid and liquid assets. Now let's look at the long-term account. This is where we start looking at what do we have to take care of us over the long haul. What you can see here is that this individual has made some pretty good investments. They've made $11,000 in a SEP. Looks like they've got a rollover 401k for about $5,000. So they don't have a lot by way of retirement plans, but they do have assets. So first house purchased, you can see here it's a pretty expensive house, most likely in a place like LA or San Francisco, major metropolitan area. And then they have an investment in a real estate property. And this is a syndicated investment. These are things that we talk about in our more advanced classes. But the point is that they have $170,000 that will return to them something like 9 to 15% per year. These are pretty good types of syndicated investments that have a guaranteed return. They usually have minimums of something like 50 to 100,000. So, we've got a pretty good investment there. But again, there's probably a hold on it. They can't cash it. It's not liquid. Now let's look at the long-term debt. So we've got 2 student debt accounts, right? You look at the total amounts of debt. Looks like they only have a little left. And then they've got a loan on the property they have. So you might have said, well, wait a minute, they have an $850,000 house. These guys are all set for life, $1 million in assets. Well, hold on. Again, you've got to look at the net. So $600,000 in debt. Now, this individual isn't doing too bad, right? They're able to cover multiple months of expenses. They look like they have enough cash to pay down their student loans. That's something where we get into a question of, does it make sense to pay these down all at once? Should we just string them out? Those are individual situations that work out on a case-by-case basis. Sometimes you get a loan officer that says, hey, your debt to income ratio isn't where we need to be. Can we pay off some student debt? That's where we start making those types of decisions. But the big point that we have here is that if you look at the short-term total net worth, it's about $30,000. Again, you want to be able to cover about 6 months worth of your expenses. So, for this individual or couple, if it's $5,000 a month, they're pretty good there on a short-term basis. And then long-term, this is really where you get into how do you want to retire? What do you want to leave for your kids? How much is tuition for the children you have or are going to have? That's where you get into a longer discussion. But what we want to make clear is that you can, with some quick math, figure out what your net worth is today. And that's where we got that 472 number. So the big point here is that you should be able to show all your short-term, long-term, and assets and liabilities. Here's just a quick visual demonstration of the difference. If you missed it from before, assets are going to be anything that are of value that you own. Liabilities are going to be your credit card debt, your student debt, your mortgage, and then the difference between those is going to be your net worth. And by the way, are there people that have negative net worth? Absolutely, yes. And again, we do this without judgment. So whether your number is 0 or negative or $100, the point is you need to get crystal clear on where you are today in order to chart that path to where you want to go. Be able to do that by understanding how this formula works. And you can go ahead and take a screenshot of this and build it on your own. Again, just some distinctions between short-term and long-term. We usually say that anything that you can cash out within 7 days, those are still short-term. On the asset side, things where you can take cash outs in 7 days. On the liability side, these are things that you're going to pay in the next couple of weeks. I'm not too stringent on saying within 30 days. It's more of a guide versus a hard rule, but these are things that are coming in the short term, where long-term are things you can pay or structure to pay over a longer period of time. So everything from auto loans on the liability side to your 401k, IRAs, your tax-deferred retirement accounts are going to be in the long term. And I just want to go through some examples. So you might say, well, wait a minute, where do I get all these balances? When I do it personally, or I do it one-on-one with a client, we'll actually go bank account by bank account and pull out what the balances are across them. It surprises me how many folks have general ideas of what they make, but they never go through and define, hey, this is the total cash that I have. Some of you might be listening to this thinking, well, it's really simple. It's $100. That might be the case, but look, I still encourage you to go down, write it down, put it in one place, because this target calculator is going to be what you go back to when you update it. And this is what you're going to want to have every time you increase how much you have. And you can see that progress along the way. So before I go to questions, I am going to share with you a Excel sheet that I just worked through. I'm going to switch over right now. So to get everything moving, to kind of get the juices flowing, we're going to go over some examples on how I collect balances. Now, I've just done the asset side of the equation. And I do that for a reason, because I want to start getting excited about what we have first, because that momentum is going to carry us into collecting what we owe. And once you get into it, you should become obsessed with figuring this out. So I've listed out the accounts I have, and what I do. I've taken screenshots of everything and have removed sensitive information, I hope, because it's all mine. So first we go to Chase Bank. Now I have some balances here, right? Checking and saving, those are the main ones that I want to pick up. And what I usually do is I do screenshot them and put them into an Excel workbook just like this, so I can always go back to it. I find that this is better than going through statements. And we definitely want to screenshot it, because we don't want to have to figure out, hey, what was the number again? Where did I get that? Because if you look back at the live version of the account, how this shows up, it's just going to show you what the balance is today. So make sure you capture a screenshot of what's going on here. So I'm going to link those back here. We've got savings. I usually will put a number next to the screenshot, so the checking is there. And then we're going to do the same thing here. We're just going to get to the lower row. Okay. So there we go. So far, I've got 12 in the short term. Let's do E-Trade. So I use E-Trade to basically play with the stock market a little bit. So here you go. We've got, in the short term, we have, I guess it's 5. I was hoping it was more. It's usually the case. And then I use Acorn, which I actually recommend. It's a nice way to automate savings. You kind of forget about it. And look, I do something like my change in $50 a month, and it's at 640, right? So it's not really my serious strategy, but hey, it doesn't hurt to add an account for savings, right? So total short term, if I look at my 3 accounts, I've got about 18,000. So now let's move on to the long term. Again, these are accounts for the long term. I have an E-Trade brokerage. We already saw that, but this time we're talking about the SEP. So I have a very small SEP that I just started 2 months ago because I knew I was going to do this video. And the E-Trade is going to get us, 1,200 there. Also have a Charles Schwab rollover, and this is a very small amount. Again, old rollovers, those are going to be small. And let's put in Merrill Edge. This is where I keep other main one. All right, so you got something like 20 in there. That's not bad. Let's make sure this number shows up the way we want it to. Love that comma. And then, okay, I've got a savings account with Marcus. That's the Goldman Sachs account. They pay something like 2% interest on any savings. Highly recommend that. All right, looks like 1.7. This is our little home fund. So just like that, you see that we've got long-term of 25, short-term of 18. Altogether, just a quick example of how you put balances together and then feed them into your personal calculator. That took me just a few minutes. And if I added those together, if I said, hey, short-term and long-term, I'm feeling pretty good right now. Now, again, the key is to do this without judgment. Don't compare yourself against anyone else. I started off with the really high example. 43,000 in assets is important to realize, because if I want to get to 430 in assets, I've got to figure out a way to 10x. That realization, this moment, is what I'm going to remember and what I'm going to use to feed into my strategy. So again, just wanted to give you a sense of how you add that up. Now that we have that, let's go back. And now that we've covered where the balances come from, we can get into a actual personal balance sheet. And here we go. We've placed those numbers. Some of these are going to look familiar from the short-term Chase checking and Chase savings. You can see here that I've put in the numbers from my sheet and see my equity/other savings accounts here for the total liquid, semi-liquid assets of about 18.5. Now, what I didn't go through were my liability accounts. I populated those here. Those are less fun to find, but sure enough, they're here. And what I usually have to the right is a credit utilization. So I'm usually trying to make sure that this stays under 30%. If you have anything like Credit Karma, or you have a credit reporting subscription to any kind, you'll see that one of the factors is credit utilization. It's a pretty important factor. And if you get above 30%, that's when you start getting dinged points. So I'm always making sure that we're below that. I happen to like points. I'm kind of a points addict. So it usually makes sense for me to put a lot on these two cards and then pay them down before the end of the month. And again, I'm just making sure that if I am not going to make a payment, that this is somewhere really low. So again, as we start thinking about where we are and what our goals are, sometimes those goals is just getting this to a certain level. I've been in a place in my life where this was near 80%. So I've definitely been there and definitely want to keep that down. Long-term accounts, we talked about a lot of these. What we didn't go through, one of the questions I got actually was, hey, you have Marcus, you said they're a savings account. It's pretty liquid. Why don't you put that in the short-term accounts? Well, for me, that is a second home fund. So for me, I look at that as money that I can't touch. So it's kind of up to you to define things into the long term that you are kind of agreeing with yourself that you're never going to touch. So that Marcus savings, if you remember from the prior screenshot, it is liquid. I can take that out. However, this is something that I have something like $800 a month hitting it, or $750 a month, and that's going to continue for the next X amount of years until it's something sizable, right? So for me, I'm not touching that, therefore it's long term. I've got my first home in here that's mortgaged, of course, so I made a little note so that we capture it in the long-term debts, and then I am a 50% partner in a short-term rental business. My asset value is denoted there. So long as it's appreciated and not gone down, it's fair to put the current market value. I just put in the value at purchase price for both of these assets. Now, I'd love to say that this is where my total assets sit, but of course I have debts. Much like most of America, I've got student loans. And again, you can see my pay down rate. I'm happy to see that go down. And then I've got mortgage. And for those who have been homeowners for 1 year, 2 years, you know that most of what you're paying down is mortgage interest. So even a year in, you can see I'm still about 97% in to my mortgage. Which means if I sold it, I'd pretty much have to pay this off, right? So if I did sell my house today, okay, I've got a little bit of equity in there. Hopefully that goes up a lot. But again, this one I'm going to hold on to the long haul. So I'm not going to move the numbers on that. So all in, once I update this, I'm very clear that, okay, I've got net worth. I've been working on this for over a decade. I've worked really, really hard. I've worked at professional services. I've run my own business for the past few years here. And I got to tell you that wealth is relative. It's relative to your peers, but it's relative to your own goals. So for me, this is a good start, but I'm patient and I'm humble enough to say that I'm grateful for where I'm at. I think that's a very important point. But I'm also realistic, right? So this isn't going to turn into 2.6 million in 1 year with my current game plan and income potential, but there's no reason I can't tell myself that I want it to be over the next 5 years. And now I've got to figure out ways to 10x it. That's a separate discussion and one that I think happens at a more tactical level and has to do with how much money you make now, how much you can make 1 year from now, and what your plan is to create multiple income streams. That is a discussion for another time. But for now, it's super important to be able to assess where you are today and super important to set goals. But again, you've got to have those 2 points in the GPS in order to chart it. So thank you for watching our overview on the personal finance calculator. We hope it's helpful in establishing your journey to better and greater wealth. If you have any questions, feel free to reach out to us. Got our phone number, our email, and our Get Started page here. It's been a pleasure as always. Thank you.